Good morning, everyone. This is Aaron Vanderford with Entercom. It's my pleasure to sit down in this fireside chat with the folks from DNOW. I'm joined today by Mark Johnson, Senior Vice President and Chief Financial Officer, as well as Brad Weiss, Vice President of Marketing and Investor Relations. Good morning, gentlemen.
Good morning.
Good morning, Aaron.
Hey, well, I really appreciate you guys joining us here. And I'll just start off and certainly DNOW helps manage every aspect of the supply chain and streamlining their clients' operations. But I'll turn it over to you, Brad, and maybe you can give us a little bit of a high-level introduction to the DNOW story.
Well, thank you, Aaron. And before we get started, my general counsel would look at me funny if I didn't mention that, some of the statements we're making in the course of the conversations contain future or forward-looking statements. It's important to note that the company's actual results could differ materially from those projected in such forward-looking statements, and any decision regarding the company or its securities should be made upon careful consideration of the information filed with the company and the SEC. Now back to your question, Aaron, and I'd be happy to give an overview of Now Inc. We're commonly known as DistributionNow or DNOW. We really have a rich history. We've been providing oil and gas related products and services for well over 150 years. We started in 1862 as part of the oil field equipment business. In 1987, Oil Well merged with National Supply to become National Oil Well, and then went public in 1996, most notably as NOI. NOI acquired Varco in 2005 from that, and then formed National Oil Well Varco, or NOV. So while at NOV, we were part of the distribution and transmission segment, and we provided a variety of oil and gas and industrial MRO products and services. And in 2014, we spun off from NOV and became a publicly traded company listed in the New York Stock Exchange under the ticker symbol DNOW. And today we're a global energy and industrial distribution company. We've got over 200 locations. We're in over 20 countries, and we service over 90 countries through our export capability. And one final note, since our spinoff, DNOW has closed on 14 acquisitions. 2 of those acquisitions resulted in the formation of our U.S. Process Solutions business. And our company comprises really of kind of 3 core business areas: our Energy Centers business, our U.S. Supply Chain Services business, and our U.S. Process Solutions business.
And that's great background. It's an interesting history that you guys have come to bring to where you are today. And certainly, Mark, I want to bring you into this conversation. You guys just reported Q2 earnings, and I wanted to highlight something that I believe is truly unique compared to other companies in the space today. In your Q2 earnings, you highlighted that the company has 0 debt on its balance sheet. It's got $270 million of cash. And in Q2, free cash flow was more than $65 million. Talk to us a little bit about the company's financial mindset as you move forward, and we may have a couple follow-ons here as well.
Sure. Yeah, I think great observation, Aaron. I think last time I checked, there aren't many public companies out there, let alone in our space, that is debt free. So it's something we've been very intentional about, keeping a pristine balance sheet, allowing us to be acquisitive when the time comes, and be able to pay that down through cash generation. So really, if you look at the intentionality on improving velocity of cash conversion, it's been a huge focus for us over the last few years. Looking back, I'd say maybe 24 months or 2 years from 2Q, generated over $370 million free cash flow. And so really what we look at, investing the next dollar, is generally 3 areas for us. In market expansion is important. We're primarily upstream focused, heavier weighted upstream. So in market expansion is always of interest to us, especially in this downturn. Digital disruption, we'll talk some about that hopefully today, and structural transformation. Those are kind of the 3 areas we're looking to use our cash.
That's helpful. And as you guys think about, certainly tied to your strong liquidity position, and you've highlighted, and you, Brad, you just mentioned it, 14 acquisitions, you're proactively evaluating these M&A opportunities as one of your keys to evaluating and unlocking value for DNOW and its shareholders. Talk to us a little bit about how things are looking on that front, and maybe give us a little bit of your mindset on uh, the general M&A in this space, and then tied to that, what criteria are you guys looking at to identify successful M&A in this world?
Yeah, I think this COVID-19 really put a different dynamic on the way we've historically looked at inorganic opportunities. I can say right now, the pipeline is active, and so it's a matter of us maintaining our discipline, and really in discussions with targets, we see this past quarter and 3Q really critical periods of real-time financial performance. Looking for us, it's really earnings durability. We're looking at how potential targets are going to manage their business in this period. Generally before COVID and the supply demand shocks, you would go back to the prior downturn, and we're really able to do real-time case studies right now, stress testing these businesses as we naturally manage bid-ask spreads. And so, we're cautious, especially with the valuable currency we talked about earlier. But we're seeking targets really that fit DNOW's know-how, looking at generating higher returns, and are instantly accretive. So those are really some of the kind of the triggers we're looking for. I'd say probably the last few years we've done, I don't know, Brad, probably 4 acquisitions, and I think all of those were in the process solutions space. So, that's I'd say probably at least half midstream focused for us. And so, you're seeing, being organically heavy in upstream, just naturally from our pedigree, if you will. The inorganic opportunities, at least domestically, generally would come in outside of the upstream space for us. Thanks for the question.
No, absolutely. I think that's helpful for folks to understand where you guys are thinking about that. One of the other things that you just mentioned that I want to dive a little bit more into is the structural transformation that you guys are going through. Tell me, to date, what have you guys done? And then secondly, what else is there to do, if anything? And then, last part of that question really is, what are the real implications on costs and ultimately returns for your business going forward as a result of this structural transformation?
Yeah, I think, in my view, I do believe there's long-term buoyancy in the market, and in the space, and the recovery will come. I think what's different this downturn and with this leadership team is, we're sizing the business in a fashion. It's not lower for longer. We're sizing it as if it's lower forever. Recognizing that's not what we believe the market will do, but that's the approach we're taking. So we're looking at the cost structure at today's market reality, not waiting. The prior downturns, you would wait to be prepared, for the upcycle. And what we're doing is, we're being nimble, and we're creating a structure that combines divisions, similarly purposed divisions that historically were standalone. We're strengthening our distribution centers and the support structure there with our field branches. Certainly looking to centralize and streamline corporate. And our continued investment in technology is really what we're also looking at to ensure those efficiencies carry us when the upturn comes. And so I think, the other structural piece of what we're looking at is really with the suppliers. We're really leaning on some of our core suppliers, bundling and kitting products and services with them to provide the best value at for DNOW most efficient, price point. So we're being very diligent, I think, in multiple avenues. But the biggest thing for us is we found our customers are hungry for new technology. COVID has shown that. Here we're doing this call virtual. And so we're really seizing on that to really go all in to gain those synergies.
No, it certainly is interesting times, and I think technology. I want to get to that in a minute, but I think this is a time where we're embracing technology not only as individuals but and companies, but as an industry, and certainly I want to touch on your business there. But before I do that, uh, let's talk a little bit about some of the fundamentals that you guys are looking at to run your business. And you guys both have U.S. and international operations. So sticking in the U.S. for now, what are some of the key indicators that you are looking at to help run your business? And certainly tied into those, uh, directionally, where are some of those indicators trending for your business and your expectations here over the next, call it 6 to 12 months?
You know, Aaron, historically, DNOW derives about two-thirds of its business from the upstream segment. And you heard, coming from our roots, coming out of NOV, with the balance tied to the midstream, downstream, renewables market, as well as non-energy related markets, for example, mining and minerals, municipal water, et cetera. In the U.S., rig counts and completions are key indicators for our business, and our revenues track fairly well with U.S. rig counts. And as many U.S. rig counts are still looking for a bottom. I believe they hit 244 rigs last week. And so some of the products, that we provide there, we provide OEM and consumables to drilling contractors, but the majority of our product sales occur once the well's been stimulated and completed, and the oil, gas, and water, or depending on the well, obviously, are brought to the surface, either separated, stored, and then transferred to the midstream and downstream market. So, a key focus is, I mentioned earlier that pipe valves and fittings and flanges, what we call PVF, for use in wellhead hookups and tank batteries or well site onshore facilities. Our U.S. Process Solutions business provides, pumping packages, fabricated process and production equipment, as well as involved in the separation of oil, gas, and water, and the transfer to each of the streams I mentioned. And then a key focus of ours is to further increase our presence, as Mark had mentioned, in the midstream and downstream end markets, where we're able to currently participate but have, a smaller share when compared to our upstream business.
And so if we take a little bit of a shift from, that was a good background for the US, you certainly have an international component to your business. And that's been one of the brighter spots, if there has been one, for the industry as we've listened to some of these Q2 calls. Talk to us a little bit about the international operations, some of the trends you're seeing there, and maybe even within the international, if there's some countries that you guys are seeing opportunities in.
Well, thanks, Aaron. The international market, we've heard brighter as a description, and we see it as brighter but less dire than North American market. It's still in decline if you look at CapEx investment versus prior years. International rig count is down 5 months in a row. And although, unlike the U.S. market, the international business probably has the lowest correlation to the international rig count for us, it's still a good barometer as far as activity, in addition to capital projects and MRO spend. We participate in a fairly diverse international marketplace in Latin America, in the Middle East, and former Soviet Union, Asia, Southeast Asia, Australia. And I'd say, right now, many customers or vendors are still working from home around the world. Customers continue to hold on to cash, delay payments due to projects being delayed, and them themselves going through kind of a cash crunch as a result of COVID-19 and the destruction of oil demand. Customers are redistributing their inventory. They're consuming inventory, again, to turn that into cash, when normally they would be obviously purchasing from a distributor like ourselves or others. And projects that are of national security that were, I think, delayed into queue, we're starting to see be reactivated. So I think that's a good sign. The downstream industrial projects, such as pharmaceuticals, chemicals, et cetera, are still continuing. There's a lot of, pain in the offshore driller market as they look to restructure, looking to outsource, preservation, maintenance, and repair and operations. And then, if you look at mining, that's still fairly buoyant, and some FPSO builds are continuing. So we're starting to see some general uptick, as the impact of COVID, originated in the Far East and worked its way across the globe.
I think that's important as we think about, the lasting effects and certainly, all the work that needs to be done in that supply chain, and your participation there. I want to touch on something we briefly brought up a couple moments ago, and that's really the technology. And so we've seen across the energy space a closer tie and adoption of technology. Tell us what you guys are doing on this front, and what does it look like the future of your business and technology?
Sure, Aaron, this is Mark. Yeah, for years, or maybe you could argue, a century, but, some type of innovation's been happening to be efficient, at a field level, for us. And, over the last, few decades, we've been really internally focused on, primarily a single ERP platform, across the globe, integrating in with our major customers and suppliers on B2B. Those have kind of been our historical investment priorities on the technological front. I think now what we're getting into as technology evolves and the adoption, both in the market and internally, with our workforce, is we're developing products now that really work in concert with this, ERP powerhouse, and the structural changes I talked about earlier, right? Making it easier for employees, our own internal employees, to do quotes, to do order handling, being able to do it from their, PDA, and just really allowing that mobile ability internally has been a core focus for us, just heightened with COVID. Really the adoption there we've seen is, as we all have experienced, VPNs and working remote has become very common. And really on the customer side, I guess I'll turn for a moment on that. DistributionNow platform here at DNow, we seek to provide the customers that technology-based supply chain solution. And so I'd say about a third of our revenue is tied with some facet of digital commerce today. And so we're already, entrenched at the technological area with our customers, but we're focusing on some innovation here, and I'll touch on a couple. We're really looking at e-commerce. E-commerce platform shop.dnow.com for us really allows customers, and we're seeing a big adoption there, procure, standardize. We're able to manage unique catalogs for our customers, right? Just like you would do back in the day. Now we're able to put those on the web, and they have workflow approvals, order history, tracking, delivery and pickup options. It's really a robust reporting system, and we've really seen customers latch onto that, which is exciting. I talked about on the last earnings call a few weeks ago, we've already surpassed, customer implementations year to date compared to what we had done all of 2019. So, these implementations are really unique for every customer. We have that ability, and so we're finding some of the majors and larger players really seize onto that unique catalog offering from DNow. I guess I could probably, we talked some already about COVID-19, but, some of the technology we kind of fast tracked is, some self-checkout options really for our customers. They walk into our branches and they're able to check out without having an interface with one of our employees, keeping both sides safe. So that's something that, we're excited about, and we're seeing customers really give good feedback there. So, at this point, we're innovating other areas, especially in the DistributionNow space for our customers, but, more to come. I'll say stay tuned there. So.
No, that's exciting. I think if there's one thing that certainly this time has brought, it's the ability and maybe a little bit more comfort around adoption of technology, and certainly it sounds like you all are at the forefront of developing that and working with your clients and certainly internally on that. So that sounds very exciting. I look forward to staying tuned on that. Shifting gears a little bit towards another big button topic at this conference, but certainly probably within the COVID-19 context, is ESG. And so we can't really talk about uh, the rest of the story without having a little bit of an ESG topic. And so one of those things that gives a good window into what companies are doing specifically is their response to COVID-19, and certainly would like to get your perspective on what you're doing with not only your teams, but also your customers on that.
Well, Aaron, this is Brad, and it's been a topic, obviously a key topic ever since the pandemic really took hold, and really for DNOW, ESG is really at the forefront of our business. We continue to align our ESG components and to really think about how we operate and service our customers, but also how we protect our employees. And let me give you some examples there. With regards to the response to COVID-19, first and foremost, we were deemed an essential business, being in the energy space, and so we've remained open. Our facilities have all remained open. We haven't shut down a single facility to service our customer. And so it was important that we stayed connected to our customers, during the pandemic. And we still have customers visiting our branches. We put precautions in to protect not only them, but our employees as well. Where our teams can work remotely, we provided the technology and the guidelines to be able to do that. All of that was orchestrated by a corporate COVID-19 response team that we put in together immediately as soon as the pandemic was announced. And so they're really driving the policies and the guidelines into the business and also with the corporate staff. One of the things we have at each one of our locations is health, safety, and environmental on-site, what we call a champion. And so they're, in continual conversation and dialogue with the corporate response team, kind of keeping up to date with the changing landscape, the changing recommendations, whether it's from the CDC or World Health Organization, based on the information that was available at the time, and really to be able to disseminate that and get that out to, our folks on the front lines. It's also interesting. DNOW is a fairly large distributor of personal protective equipment, so we have, been able to provide a lot of the PPE equipment, whether it's latex or nitrile gloves or masks or face guards, et cetera, to our customers as well as our employees. And as Mark mentioned before, we're looking to fast track, technology to help with protecting our customers. The self-checkout solution is one that comes to mind that we fast-tracked and rolled out to our branches. And then also utilizing, the e-commerce channel that I mentioned, the shop.dnow.com, having that capability to procure the products that our customers were, walking into our branches in a face-to-face manner, used to ordering. Now they can use their PC or any mobile device to go online, get instant access to their catalog, get instant access to, a lot of the information that they're used to getting, and be able to, procure and get the products they need to keep their business running during this difficult time. So that's just been some of the highlights there I wanted to share on the ESG front.
No, and I think that's incredibly important, and certainly applaud you for your efforts and things that you're doing there. Just to kind of wrap up, and Mark and Brad, I appreciate your time. I'd like to kind of just hear from each of you. if there are one or two things that you want investors to be able to take away from the Now Inc. story, what would that be?
Yeah, this is Mark. I appreciate everyone's time and interest today in DNOW, and I think one thing we've shown over the decades, and 150 plus years is our ability to do what we say we're going to do and deliver on those expectations. And so keeping a pristine balance sheet has been a very key focus to us, as shown by being debt free and ample liquidity. And so I think, for us, as we turn our sights on cost transformation, structural transformation, we've already shown, quarter after quarter here, our ability to execute on that, getting leaner, getting more agile. And so we're excited about the future. Downturns are typically where we find our M&A opportunities, if you go back and you look over time. So this is kind of our sweet spot. It's painful for the industry, but this is a time where companies are built, and it's exciting for us. And so hopefully we shed some light on DNOW, and like I said, I appreciate the interest.
Yeah, Aaron, this is Brad. I'll echo Mark's comments. I want to emphasize, zero debt, strong cash position. We've got one of the best balance sheets, I think, in the OFS space or industrial distribution space. I would say this isn't our first downturn. We've got a lot of experience on the senior management team, as well as in management across DNOW. And so we know what levers to pull within this downturn. What's unique of this downturn is certainly the COVID aspect of it and the destruction of demand resulting from that, and that's unique. And so we have a playbook that I think works well in a downturn. We've certainly had to adjust our playbook for this downturn, and that speaks to what Mark was saying earlier about the structural transformation. That our mindset is not lower for longer, but lower forever, and the way we see the market and how we have to quickly right size our cost structure to match the current demand. And then when the recovery comes, and we believe there will be one, then we will be more agile, and we'll be able to take advantage of that based on our existing infrastructure. A couple of key aspects. Digital disruption. I mean, we plan to be the digital disruptor in our space. We're investing in technology in this downturn when many companies can't afford to do so, have a heavy debt burden on their balance sheet. So I think that's a key takeaway there, and that we have our sights set on further end market diversification. We mentioned, 2/3 of our business comes from the upstream space. And although we believe that's a very good market for us, we want to further diversify into midstream, downstream, and other non-energy markets. So those are some of the takeaways that I would like to point out.
Brad, thank you for that. Mark Johnson, Brad Weiss, thank you very much for joining us here at Entercom. Certainly appreciate your commentary and thoughts about the business. You certainly seem well positioned for future success, and I look forward to following up with you guys here soon.
Sounds great.
Thank you, Aaron.
Have a good morning.
Thank you.